everybody. I wish I could see faces, but obviously we cannot. And thank you for joining this time to talk about the exciting topic of RegTech. My name is Liesl Bebb-McKay. I'm in Brussels, part of the Europe team and part of the team that's helping to bring PredictR to our clients in the market. It's very close to my heart. I've got a background in financial services, so I know how important this topic is. I'll let Beyers and Jacques do a quick intro, and then I'm going to talk you through, first of all, what this thing we call PredictR is, but also how it relates to the work you're doing and how potentially it may be interesting for some of your clients. But first, let me just hand over for a quick intro to Jacques.
Thank you, Liesl. Yes, I'm Jacques, part of the PredictR team. More on the technical delivery side, the development side, taking the IP, the brilliant IP from Beyers and Sam and the guys who know the financial and the risk modeling world and translating that into functional code. I've been with BBD forever, since 1998. And this morning I had a conversation with well, not so much a grad anymore, but a young colleague of ours. And I discovered that she was born in 1998. So I started at BBD when she was born, and she is now with us for about 2 years. So I've been around, yeah. So on the technical development side of the product, that's where I fit in.
Okay, Beyers.
Beyers?
Hi there, everybody. Yeah, so I've been around a bit longer, but not so much in BBD, in the financial industry. So I'm a financial risk SME, subject matter expert. A long history in risk management in the banking financial industry, and we as Ilian, we are Ilian, a subsidiary of BBD, and we specialize in financial risk management and data management. And myself from Ilian, part of the PredictR team, which is a collaboration between BBD and Ilian to bring this product to the market. But let me not waste time. I'm going to hand over to the presentation that Liesl is going to do for us.
Okay, so maybe just starting at the beginning, the name, PredictR. Why did we even call this? PredictR, predict risk. And this is a tool that we've created for clients having seen the need in some of our financial services clients. Now, I'm sure as techies reading the Basel Accord or understanding the difference between Basel 2 and 3 is something you love to do and read about on a regular basis. But basically, the Basel Accord governs how banks protect your money. And there's a number of requirements from a compliance perspective that banks need to fit to make sure that they don't lose the money that they are protecting. It's governed by an accord that was set in Basel, signed by a number of countries, and it requires a very onerous regulatory reporting from banks to be able to make sure they don't end up like UBank, which is part of the VBS structure that's just been put under curatorship because they weren't holding sufficient regulatory capital, thus got massive fines and are now under curatorship for being very naughty. So banks have to comply with these regulatory requirements on a regular basis. And as of next year, these requirements are getting even more onerous. These requirements got particularly onerous after the crash, after the financial crisis of 2008 and 9, and will now get even more onerous. And the calculation requires a huge amount of data that has to be taken from financial teams, data that has to be taken from risk teams, aggregated, and then run some significant mathematics against. Now, companies can either go and buy very expensive software from Moody's to do this, where they have no access to what the calculation is doing. It's a bit of a black box, costs an absolute fortune. And so clients in Africa and in less big banks find it very difficult to pay such a price, and even if they can afford it, often don't get what they need from the solution, or they can do it on the back of a spreadsheet or in Excel, and in many cases not get a really good answer either. So what we've done is taken these calculations using the very clever minds of Beyers and Sam and the very technical expertise that BBD has, and built two tools. one that allows you to do Basel, and I know that you're also excited about Basel, so you know the difference between Basel 2 and 3 and 4. But needless to say, some countries are in Basel 4, the very, very big one that's coming next year. The calculation is very difficult. Some are still in Basel 3, most of Africa that aren't signatories to the Accord, and some in the Middle East and Africa are only in Basel 2. This tool, one of our tools, does all three of these calculations, but then we have another tool I'm going to talk you through, which goes even further than just the regulatory compliance. So that's PredictR in a nutshell, and that's why we call it PredictR, predict risk. Now, like I've mentioned, banks have to comply with these standards. Not only do they have to comply with the standards, but the way they report has to be auditable, and they have to be able to trace their data back. And so it's not just designing the mathematics, but it's also designing the way that the tool fits together in the workflow that makes it all happen. And so what we've done is created this package, the suite of two products that work hand in hand. And we don't have to sell both to our clients at the same time, but they really are standalone products. And when I say standalone, they can do the calculations. But of course, if you think about the complexity of the data, you can't just go and lay something down and suck in the beautiful data, because we all know that data sitting in big organizations is complex. And so a lot of the work we do would be the data preparation that comes before. So although the product sits on its own, the work doesn't. So we have two tools, but then we bring the expertise to be able to get the data into those tools, set the models up correctly for the clients, and run them. And that's the product suite that we call PredictR. It consists of a risk forecaster. And the risk forecaster, basically, if you've done any kind of economics or you've done any kind of business, you'll know that when you look at the financials, the balance sheet and income statements of a business, and you're trying to imagine what will happen in the future, it's very affected by what's going on in the world around, what's happening in interest rates, what's happening in inflation, what's happening in scenarios around the world. And what Beyers has cleverly done, he's got a spreadsheet that he's built over many years that allows you to input all these different things and very quickly see what the impact of a change in any of these scenarios would be. So if interest rates go up, what will happen to my entire balance sheets and income statements? If we have a change in inflation, what will happen? Or some other random factor that our clients can decide. This is hugely valuable for financial services clients, but any clients that have a credit element, and by credit element, any client that's lending money in any way or using people's money to fund any product in any way, so financial services clients, this type of forecasting of the scenarios of balance sheet and income statement is hugely valuable. And what Beyers has done is not only created the Excel spreadsheet, but we've got the technical expertise of BBD now that have been able to make those calculations run in such a way, leveraging the incredible power that is Excel, because the tool is just, it's genius. The incredible power that is Excel with the technical expertise that it takes to do these calculations really, really quickly and put it together in this risk forecasting engine. Then we've got the Basel calculation engine, which does calculations for 1, 2, 3, and 4. Just so you know, to run these calculations in a normal organization would probably be a batch overnight run. It would be something that takes hours and hours and hours. And if you find an error, which you always will, you will have to run it again for hours and hours and hours. And what Jacques and his team have done very well is not only make it look beautiful when the results are done, but also do those calculations in a parallel way so that number of seconds we are able to get the calculation for Basel 1, 2, 3, and 4. Well, 2, 3, and 4, 1 is totally relevant. And then, of course, we've got this team of experts that can help to get the data into the tool. There is a QA. I will get to questions at the end. Julian, I do see your question. I will let Beyers and Jacques look at them while I'm going so I don't get distracted. Okay, so what does this thing do? The risk forecaster, like I've explained, it allows you to do data-driven financial management. So that could be financial risk forecasting. What will these different scenarios impact beyond our financial statements, balance sheets and income statement? or whatever else it is that you're looking for. Stress testing. So stress testing basically means what is the portfolio effect of these changes? So if we had to have an extreme event, which of course in the world we live in is kind of like extreme events seem to be things that happen every day. So I don't even know if there is such a thing anymore. Stress testing, what would happen if we have like a really excessive thing happen? What would that impact our credit portfolio? How would that impact our balance sheet or income statement? And then for banks, another important thing is, how do they optimize their assets? So how do they decide, based on different accounting rules, which balance sheet or income statement different products should be in? And I'm not going to go into the exciting sides of accounting, but basically in accounting, the way we account for different things according to different standards means that in most banks, we hold multiple balance sheets and income statements, and we want to make sure that we optimize these for the best return for the bank. This tool allows us to play with some of the scenarios and do that as well. So this is the risk forecaster. So basically, if I have to sum it up in a nutshell, what you get is an Excel add-in that allows you to do very clever predictive forecasting for credit risk if you are in any kind of business that is that has a credit element. Let me just tell you, this is one of the most useful tools, not only for banks, but startups or fintechs, small businesses that aren't able to do this on their own. And not only that, this is something that people will leave to very late in their process. They may do things that have a strong regulatory requirement as a matter of urgency. This kind of thing will be very back of a matchbox. And when we come up with a tool like this, it starts to become very exciting for them. Not going to have time to go through the methodology, but basically what it is, like I said, Excel add-in, it produces the reports at the end, it's interactive. And the team from Ilian have also been very clever about creating options for front-end interactions using Power BI. Was that me or was that a question? Nope. Okie dokie. It looks something like this. So it doesn't look sexy to you, but trust me, if you are an Excel junkie and someone that's playing in credit risk all the time, it's super sexy. As I say, you can see as we enter different forecast scenarios, the trends will adjust, giving us a new prediction and a graphical visualization of that at the same time. Okay. Any questions at this point? One in the chat. Oh, Lizandi's just making a comment. Any other questions? I mean, just yell out if you have them at this time. No? Okay.
I just mention that one question that came through. It's got two acronyms in them, and I'm not sure what they mean. I can assume or guess, but that's very dangerous. So if Julian can just let me know what those acronyms mean, I can try and answer.
FVA, I think, Beyers is funding valuation adjustments.
Other one, something similar. Valuation adjustments.
Funding valuation adjustments.
So F is for funding and XVA?
XVA on the derivative portfolio calculation. Okay, Julian, you're getting super complex.
I think when it comes to valuations, the model is explicitly designed to come up with a type of share price of valuation. So regulatory requirements, capital ratios, the health of the balance sheet and the income statement, constantly the income statement eventually will determine the value of a financial institution. So it's directly related. So it forecasts the forward-looking view, and we can go into the future as far as we want to, but fairly accurately 5 years into the future. And that's typically what you need to do to use the future cash flows, discount them, and come up with a valuation for the firm.
Okay, so going into the Basel calculation engine, like I say, it looks at all elements of the requirements for Basel, does the calculation, but not only does it do the calculations, it does them exceptionally fast and produces the reports in a very beautiful front end. So not only do we have the engine, but it's a fully packaged product. It looks and feels like an application that clients can have on their desktop, and it will enable them to produce a beautiful visualization of the data outputs and reports and allow them to integrate it into their architecture. It covers Basel 2, 3, and 4 for credit risk. We're not looking at trading risk calculations, trading book calculations at this point, but these could be added in time. Okay, so the highlights are it's cloud-based, easy to access, and something that we can help to train teams to get in place for themselves. Like I said, it's industrialized, super quick, and addresses all the regulatory requirements. This is how beautiful it looks. This is the front end. As I said, it looks like an easy to use application for any of you that have been exposed to Vanguard in any way. It's designed with a very similar kind of look and feel. It allows for custom reporting. It shows the number of records that have been calculated, time stamped, run times, and allows you then to visualize the run. In a lovely little dashboard with 4 widgets. Each of the widgets can be exploded out and they interact as you go over them. I'm not sure about time, but if we do have time, I'll ask Jacques. No, we're not going to have time to go through. If any of you have an interest, I think it's really worth setting up time to go through a demo with Beyers and Jacques so you can interact with the tool. But needless to say, it's very easy to use. And as you can see, the reporting is in a way that if you are a risk or regulatory individual inside a client, this will make it very easy for you to do your reporting up to your board or in your monthly packs or whatever it is that you require. You can simply export these visualizations into whatever kind of reporting you are outside of the regulatory data. Of course, in both of these tools, we use them for regulatory, but the insights that we get from these kind of calculations and data are super useful for business. Somebody was mentioning XVA there. When we're doing calculations of any kind, this credit type of calculation is useful if we're pricing derivatives, if we're doing valuations, etc. Just clicking through some more screens, you can see it's neat and clean, allows you to compare different exports against others to see what movements there have been. Definitely not going to go through any of the assumptions and how the processing works, but if you do have interest in figuring all out how the maths and the technicals behind it work, please do reach out to Beyers or to Jacques. Of course, as I said, these type of calculations are really useful. In our clients, they say they have a strategic imperative. If they're going to spend huge amounts of money, what else will they get? Well, of course, they can get other business advantages from calculations such as these, deal pricing, especially if they're in a trading environment or if they're in some kind of a product pricing environment inside a bank. Scenario analysis and strategic planning and the Excel add-in, really, really useful for this. We're also seeing other use cases where it could potentially be used for ESG calculations if you're trying to track your ESG performance. We looked at a client in the UK the other day where they were trying to predict some client data forward that was not a financial data at all, and we saw that we could use the engine for that as well. So anything where you're wanting to take a set of data, use it to give you a prediction and then allow you to interact with scenarios, this tool can be very useful. I have mentioned balance sheet optimization, and of course, if there's a bank that's looking at a head office level to do funds transfer pricing between different units, we can use the Excel add-in for that as well, and portfolio optimization as mentioned. Where we are having very interesting conversations around these tools is not only directly selling them into clients, and I mentioned African banks or tier 2 banks or Eastern European banks, is also in collaboration with some of the professional services firms. So in professional services firms where they do consulting around this type of thing, so they might be doing consulting around model validation or inputs into assumptions and scenario analysis, they can do that kind of consulting still and use us for the engine in the background. And what we would generally like to do then is we will run the tech, we will do the integration, set up the data, they will do the consulting around how it should be calibrated, as it were. And then we would like to come in every year and just make sure that we're optimizing and creating the relevant scenarios for the time that the year finds itself in. So the way we price it, there's two options. You either pay for the product, and then there's a license fee every year, which allows us to do any upgrades, updates, small pieces of rework, or you can pay us to run the model for you, much cheaper. You don't then get the IP yourself. We will run the model on your behalf. We will do all the work around it. That's actually a really beneficial way for us as well. It means it becomes an annuity product and a way for us to continue collaborating with our clients on an ongoing basis. What do we bring? We bring great BVDers, so great tech, great compliance, and a reg tech solution all neatly packaged together. And we use that cross-sector experience that we have to deliver a very neat little reg tech products. What's really interesting about the reg tech space, if you have any interest in reg tech and you look at just the valuations and the type of products that are out there, the vast majority of them are in fraud, AML, and KYC. And there are huge amounts of products in this space. There are very few in this space. So it's a very small market in the product set that we're playing in. The competition is not significant, just because it's really super niche. So if you do see an opportunity at your clients, chances are they will find this very interesting. And so I would encourage you, if you do see it, to sort of give us a shout out, and we can chat further. And that is that from me. How's my timing? 3 minutes. Questions from out there in the world, BBD?
So the time is 3 minutes to 4. Maybe while people are typing out their questions, we could get a bit of a demo. I don't know if we can fit a demo in about 15 minutes, Jacques. Thoughts?
I think Jacques has to go at 4, Jacques.
I do, unfortunately, yes. I'll just answer the question of Alistair. Alistair was asking, does it support any data lineage? And the answer for that is yes, more on the forecasting side, on the risk forecasting side, where you can see the whole journey of the data aggregation all the way through to the forecast and forward looking. Less so on the Basel side, because the Basel side is more prescribed. So those calculations are published by the Basel standard. People sometimes think that refers to it, or thinks our solution is a black box, but it isn't really, because it really just runs those exactly prescribed calculations. So it's got a data contract coming in, it's all the data it needs to do the calculations, and it produces an output. But certainly on the forecasting, on Beyers' side, the forecasting model, utilizing the macroeconomic indicators, I mean, the whole model is built around using macroeconomic indicators, putting in the data, applying certain calculations, forecasting, showing the results, and then forecasting into the future. So that whole data lineage is shown throughout.
Maybe I can, whilst we've got a few seconds. Yes, here is a view of the one sheet of the forecasting utility. It is basically where the user interacts with the model by inputting macroeconomic indicators. You would see to the bottom, you've typically got the summary of the income statement at the top there, then the balance sheet. This all is the result of many different engines that work together in an integrated fashion in the back that produce all of this outcome. And what you see is a summarized version of all of that. And to the bottom, you've got all the ratios that are important for risk purposes, as well as capital management purposes, as well as some performance metric to the bottom. Now, typically, as you know, ideas, this scenario that you see here is very much a stress testing scenario. So very much a downturn scenario. There you see the real GDP going into a deep recession. If I now take that last actuals of 2018 as an example, part of the demo, I just spread it over the forecasting period, immediately all of the engines bottom up kick in, and then within a few seconds it produces a brand new 5-year forecast for the bank, which is something that happens in seconds. Banks typically, if they run their budgets, it can take them anything up to 3 to 6 months to complete the integrated budget. This model does it in seconds.
Yeah, I think that is one of the most, let's just say, the most important things to share with clients. Someone said, can you tell me in one sentence why a bank should choose us and PredictR? And I started typing, but I'll say it out loud. A bank would choose us and PredictR because what they're getting is an accurate calculation of all the requirements of Basel, much quicker than they could do it themselves, with a very easy to use front end that allows reporting, auditing, and data management. So that's on the Basel side. On the PredictR side, why would they use it? Because they don't know what they don't know. And to do accurate forecasting without a very powerful tool takes lots of expensive people's time. Our Excel add-in allows them to do it on the fly in a meeting with an immediate result. So they can do model validation, scenario analysis on the fly, which is essential for their own business value. I hope that's an elevator pitch. Also, it's way cheaper and it's beautiful.
Well, it's way cheaper than any of the competitors out there, and it's way cheaper than a client having to assemble their own team and develop it from scratch.
Yeah, and I think the important thing we bring that's different to the competition is we bring both the regulatory skill sets, so people that understand the mathematics and the compliance requirements, combined with a team that know how to do it very effectively using technology. That's different to what the competition brings.
And I think, if I may add to that, Liesl, to say this, that is exactly why Ilian and BBD is part of the group. That's why Ilian is part of the group. So we come up with the financial risk solutions, and BBD helps us to put that into a software solution.